For overlooked stocks, we're looking at Rigel Pharmaceutical, which is trading at its highest level since September 2021. The rally's on the back of last week's earnings, which saw it post a huge beat on both the top and bottom lines. Let's bring in George Tsilis, our senior markets correspondent, for more on this company. George, thanks as always for being here to highlight an overlooked stock for us. You know, Rigel closing up 4% on the day, up almost 25% on the week, though. You know, how were their earnings?
Well, they actually were quite good if you look at the context of it, breaking it down, which I will in a second. But, you know, the stock is higher quite a bit since the earnings announcements on the 5th. It's up over 210% over the last 52 weeks, and it's still below its 5-year levels, which were around $48. And this is going back to 2021. But nonetheless, this is a biotech company. It's a small company from a market cap standpoint, around $650 million or so. They do have 3 primary drugs that are already commercialized, so they're making revenues or generating profits, and the drugs all surround areas of health needs like hematology, oncology, leukemia is their primary one, and they do have collaborations with companies like Eli Lilly, but also medical establishments like MD Anderson, which is a cancer center out of Texas. But nonetheless, if you look at the earnings per share and revenue numbers going back to the 5th, they denoted a post of $3.91 per share. That beat the estimates, which were around $1.40. Last year for the same quarter, they lost 6 cents. So this is a tremendous turnaround quarter for the business. And then, of course, sales came in $102 million versus the $73 million estimate. And so this was essentially a 176% increase compared to the same quarter last year. So when you actually break down this sort of monumental move, both in earnings and revenues, one of the factors involved was contract collaboration revenues, which were about $43 million for the quarter. Product revenues were higher by 76% to $59 million. So that's your $102 million total sales. But the collaboration revenue component included a $40 million collaboration licensing cash payout from Eli Lilly. And so that, I think, was a little bit of a surprise for those looking at the stock. And that's been causing the stock to move to the upside. But at the same time, and we talk about these, one-time, windfalls, if you will, one would say that maybe it's not a continual thing, but the company did also guide higher for 2025's total EPS as well as sales. For sales, they moved the midpoint target from $215 million to $275 million. And that includes an additional $45 million to total announced $60 million in contract collaboration revenue, which previous to this was around $15 million. So the collaboration revenue numbers for the remainder of the year, as posted by the company or provided guidance, were about 3 times the normal expectation. So in essence, we saw a gap to the upside and just a continuation as a result, because I think a lot of folks who were either in this stock or some who are short the stock, because the short float in the stock right now is around 13% as of the last 30 days, maybe got caught blindsided and ended up covering the shorts, and the stock has been moved up nicely.
And I was, looking this one up because I wasn't familiar with them when we decided to do them for overlooked stocks. And one thing that I saw flagged by a couple of analysts was their accrual ratio, that they had some concerns about their free cash flow and potentials to their future profitability. Was there anything that you noticed there that you thought could be an issue?
Yeah, so that's why I kind of broke this down, Marley, is if you look at the collaboration revenue versus the product revenue, it's important to note that collaboration revenues can be windfalls that are 1 quarter based or maybe over time for a year, but those aren't necessarily recurring, and that's important. The product revenue is recurring, and the product revenue, as posted by the company, is 76%. So that was meaningful. Plus, the product revenue guidance was also meaningfully higher. But one of the things I did notice, and I think there are some concerns you have to be aware of, and this is maybe what some of the analysts are looking at here, is as of right now, if you look at the EPS estimates for this fiscal year, $4.89, but in next year, it's actually down to $2.93. So this year's forward multiple, it's trading on 8.5 times with 30% earnings growth, but next year it's 13 times. So when you see the forward multiple increase in the following year, it's suggestive of that earnings estimates are down the following year. So that's something I wanted to bring up because, unless these collaboration revenues become more consistent, which right now they seem to be, but anything could change going forward, that might pose a problem for the price movement higher going forward. But nonetheless, the company is profitable. And even last year, on the sales they generated around 268 million, they had $98 million in net income. And they also have, based on what they said, $108 million in cash on the balance sheet. So I think this is what's happening this week is a re-rating based on higher collaboration revenues. But nonetheless, it was a pretty meaningful one in terms of the beat, but also the product revenue, which is the more steady revenues, also are increasing at least 30% a year based on estimates. And they also talked about how patient availability is improving, and that might be based on insurance, authorizing the use of their products and paying for it. But of course, patient affordability is another concern that was an issue, and I think that's being rectified here based on the business. But I will say this lastly is the analysts right now at the midpoint, there's 6 analysts that cover the stock, so it's not highly covered. Midpoint analysts at $38, high analysts at 67, and low at 23. So for what it's worth, it seems to be trading right around the midpoint analyst estimates for the year.
Well, we appreciate you breaking all of that down for us, George, and have a great weekend.